Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we'll be taking a look at a bunch of exciting stock market news, notable earnings reports, and we'll see which stocks are the morning's biggest gainers and losers. Just before we get into that, if you're wanting to unlock some fantastic investment research tools, make sure you've downloaded the TipRanks mobile app. The link will be in the description down below. And don't forget to share this video with your friends and let them know where you're getting all of your market news to start the day with. Now let's get right into that exciting stock market news. U.S. stock futures are wavering a bit this morning as geopolitical tensions rose last night following a missile hitting Poland. At first, it was reported to be a Russian missile, but now is being said this morning that it was likely from a Ukraine air defense system. Right now, Dow futures are flat, while S&P 500 futures are down 0.03% and NASDAQ futures down 0.11%. Shares of Carnival Cruise Line are falling this morning, currently down over 12% after the company priced a $1 billion debt offering. They priced a private offering of 5.75% convertible senior notes due in 2027 as part of the company's 2024 refinancing plan. Carnival says that net proceeds from the offering will be used to make principal payments on debt and for general corporate purposes. Analysts currently rate the Carnival Cruise Line stock a hold with a slight upside of 1%. Amazon Web Services announced the launch of their 8th infrastructure region in Europe. This one will be in Spain. With this, Amazon Web Services plans to invest up to $2.6 billion in the country over the next decade. The new AWS region is estimated to support more than 1,300 full-time jobs, and the region will allow customers to run workloads and store data securely in Spain while serving end users with even lower latency. Analysts currently rate the Amazon stock a strong buy with an average upside of nearly 42%. Walt Disney is raising some of their ticket prices ahead of the busy holiday travel season. Disney is keeping their lowest price ticket for Animal Kingdom at $109, but due to high demand for the Magic Kingdom, day tickets will range from $124 up to $189. Prices will vary by park and date. These changing prices will come into effect on December 8th. The Walt Disney stock is currently rated a strong buy among analysts with an average upside of 32%. And Peloton will be expanding their collaboration with Amazon and start selling their bikes on both Amazon UK and Germany. Peloton noted that the UK and Germany are strategic markets for Peloton, where we have built sizable and engaged member communities. Further expanding our distribution channels through Amazon is our latest move to make Peloton readily accessible and meet our members where they are. Peloton had launched their bikes on Amazon back in August here in the US. The Peloton stock is currently rated a moderate buy with an average upside just shy of 8%. Now moving over to notable earnings reports. We have a couple of big names reporting in the after hours today with NVIDIA and Cisco Systems, and we also will be hearing from Sonos and Bath & Body Works. In the pre-market this morning, we've heard from Target. Their stock is down over 13% currently after they posted a notable miss on their earnings, but even worse, they lowered their Q4 guidance for what should have been a very busy holiday shopping season. Their Q3 earnings per share came in at $1.54, which was 64 cents shy of analyst estimates. Revenue of $26.5 billion was $120 million ahead of expectations. Target's CEO said in the latter weeks of the quarter, sales and profit trends softened meaningfully, with guest shopping behavior increasingly impacted by inflation, rising interest rates, and economic uncertainty. This resulted in third quarter profits well below their expectations. The fourth quarter will also be weaker than expected, with the company planning for a low single-digit decline in comparable sales. The Target stock is currently rated a moderate buy with an average upside of 6.5%, but we'll see how price targets are reiterated following this report. On a more positive note, we did hear from Lowe's. Their stock is up slightly after beating on earnings and revenue and also increasing their outlook. Their Q3 earnings per share of $3.27 beat expectations by 18 cents per share. Revenue of $23.5 billion was $320 million ahead of estimates. They noted that sales on Lowes.com grew 12% on top of 25% growth last year. For the full year, they're now expecting $13.65 to $13.80 in earnings per share, which was above the analyst consensus. Analysts currently rate the Lowe stock a moderate buy with an average upside of 10%. And we heard from Zim Integrated Shipping. They beat on earnings and revenue and also declared a notable $2.95 per share dividend. Their Q3 earnings per share of $9.66 was 21 cents ahead of estimates, while revenue of $3.23 billion beat estimates by $70 million. Their CEO commented that given our significant cash generation and consistent with our prioritization of returning capital to shareholders, we have declared this year over $1.26 billion in dividends. Analysts currently rate the Zim stock a hold with an average upside of 18%, but the most recent price targets came from last month. And a notable earnings report from last night was Advanced Auto Parts, but not for good reasons. Their stock is currently down over 14% after they missed on both earnings and revenue and also lowered their future forecasts. Their Q3 earnings per share of $2.84 was 51 cents shy of analyst estimates. Their revenue of $2.6 billion was flat year over year and $50 million shy of expectations. They lowered the guidance range of their adjusted profit to $12.60 or $12.80 per share versus the consensus of over $13 per share. Analysts currently rate the stock a moderate buy with an average upside of 14%, but the most recent rating yesterday came in as a hold. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Grab Holdings following their Q3 results. Trading under the ticker GRAB, their stock is up about 16%. They're followed by Sportradar Group under SRAD, up 8.5%, and Mizuho Financial under MFG, up 6.6%. And no big surprises on the loser board this morning. Leading the biggest losers is Advanced Auto Parts following their earnings last night. Trading under the ticker AAP, their stock is currently down 14.6%. They're followed by Target under TGT, down about 14%, and Carnival under the ticker CCL, down just over 12%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you so much for watching. Have a great day, and I'll see you back here next time.